Anyway, so let's take a look at this weekly chart of the euro. Not a lot to talk about here. This is how the chart has looked for many months for us. We've had these levels on. Prices hit the top level. They barely, not even really touched the bottom level. But it looks like prices are on their way back down, right? So, very quickly, and this shouldn't take more than a minute, over the next few months, or, at least month or so, we would expect prices to stay between these two levels. Obviously, this, because of how we just touched the top one and then fell, when someone comes in, I'm not saying you did, but when someone comes a little bit late, I think I always have to re-grab the chart. But anyway, so given the fact that price barely touched the top level and fell so hard, our top supply level, I would be very surprised if prices went up through that level anytime soon. In fact, I'd say this lower level is more at risk than the upper level. But we'll get into that, why, in a little bit. But anyway, we would take another, as you could see, a few weeks ago, price almost touched the bottom level and turned higher. So what does that tell us about the supply-demand equation down there as well? Small imbalance or big imbalance, right? How do we read that? Well, the fact that price couldn't even get there and turned higher, yeah, exactly, Borb, is probably a pretty strong imbalance. So we would look to lean on that level for long positions. Now, if and when prices get to either of those big picture levels, we could certainly take them as swing trades as we did, or you could also take them as you can lean on those levels in day trades for day trades, right? Okay. So I would do something like this. Let me just draw something in here and show you. Okay. All right. I'm just going to do. Hang on a second. Actually, that's going to take too long. Never mind. What I was going to get at, when prices are at or near these big picture levels, as a day trader, you want to come down and only take smaller time frame demand levels as buy setups and ignore the supply levels as sell setups. Is everybody pretty clear on that? Okay, you can also day trade off these areas. Just make sure you're looking for long setups on small time frames when you're near larger time frame demand, and sell setups in supply levels when you're near larger time frame supply. That's all. So given that price has some room to fall to this demand level below, okay, I'm going to focus on this 30-minute chart for a few minutes, and I'm going to do that right here. Okay, I'm going to focus in on this area that I just circled. Let me grab it for you. Okay, so now that level's right around 131. Okay, and if you see where 131 is on the weekly chart or daily chart, right? It's still a far enough away from larger time frame demand to take a short-term trade. Okay, and perhaps this one will hit during our session today. We'll see. So that area that I circled, though, I'm not just going to try to draw a supply level out of that. Okay, instead I'm going to go down to this 5 or 10 minute chart and really be able to hone in on a quality small time frame supply area of supply. Okay, so I'm going to do that here. Let me just do that. Let me just draw that in for you. Give me just a second. I'll capture the chart again for you. Now, there's two ways people would do this, at least in our program, okay? So there you go. There's that little 10-minute chart. All right. D-Nice, yeah, it all depends on what your definition is of a supply and demand level, okay? Because most levels I find that people point out, we would not call them supply levels, right? Remember, they have to meet our criteria. A lot of people say, oh, that support level, didn't hold. Well, that depends on your definition of support. One level, that's the trickiest thing for a lot of people in trading is people think of support and resistance. The problem is everybody's speaking a different language, right? To one person, support and resistance is a Fibonacci retracement level. To another person, it's a pivot high or pivot low or a moving average or an Elliott wave point. I could go on and on. But we have to be careful and make sure that our definition of support and resistance matches where, the definition of where real buyers and sellers are. Anyway, take a look at the 10-minute chart. So some people would draw the level like that and take this as a short-term trade. If you're going to take it on a small time frame like that, you're probably better off doing it in the currency futures, okay? And actually, if this one comes up, I might do it here. Other people in our program would take the upper portion of that, and it would look something like this. Okay? Some people that are looking for a really tight stop would take a level, draw your lines like that. All right. All right, so let's take a look, and I think we'll leave that one alone. Okay? All right. Yeah, in the S&P, we're just, I think, getting to a supply level. I don't know if we're there yet, but we can take a look in just a little bit. If there's time at the end of the session, we'll take a look at the S&P. But I know we're getting close to a big area up there on a larger time frame. Okay? So we'll leave this euro in. So again, I think we've got the big picture covered. Okay? And then this one, yeah, this is not your standard rally-based drop. Obviously, this level around 131.40 is better. But I would also expect prices to, at least have some reaction off this 130 kind of 85 area. All right. Remember all those trades I showed you last time? I showed you about 2 weeks worth of trading and statements and stuff. Those are all little trades like this, taken into currency futures. Okay. All right. Let's move on to another market. And again, we're just kind of picking on this area here where we'd expect there to be some sellers. Okay. And let's move on. Let me pull a chart up here and I'll grab it for you. So here's that daily pound. This is the one we set up in here. We spent like a long time on this one. And remember we said, I wanted to review this one with you because this is such an important point. Remember on this one? I'll be able to hear. Sound should be okay. So the whole point with this one, now this one worked out real well, and it looks like we're all almost near the target, but take a look at the supply levels here, okay? So we had rally-based drop, but then we had this cluster of trading right before it, remember that? And then we had a strong drop in price out of it. So this kind of three-step process here, the reason why I'm pointing this out is this is the picture of a very, very quality setup, okay? And here's exactly what I mean by that. This has the three key components to a key level, all right? Trade's working out pretty good, but take a look. So we have rally-based drop, which is a supply level, step number one. Number two, we have a cluster of trading just under that, which means, remember this part, it's important. Remember, if you have this little speed bump of supply just below the rally-based drop supply, that means that we're going to have a lot of buying is going to take place to get up to our supply level where we want to sell at, okay? In other words, the presence of this cluster of trading, this supply right here, means that it's going to take a lot more buying power to get up to our supply level that we want to sell short at, which means by the time, if and when price gets to this level, like see here, it just touched it up here, you're going to be reaching that level with fewer buyers on board because you had to use up so many here. Okay? That creates, what does that create? A big supply and demand imbalance right up here. You're reaching a fresh supply level with few buyers on board. Okay? And the third step in identifying a quality level like this is how prices left the level. Okay? How prices left the level. We want to see a nice strong drop in price. We had it here, and then it continues on for a few more candles. And this is a daily chart. Okay? All right.